Everyone has an established date. What does that date mean? For us, it marks the beginning of unlimited potential. Our team has been immersed in the startup ecosystem for 20 plus years, and we know how to help large organizations and emerging startups plug in and get connected. For larger organizations, Established helps with your innovation, startup, and communication strategies. From designing your startup program engagement strategy and sourcing companies to developing community programming and communications plans, we roll up our sleeves and put decades of experience to work for you. We have had thousands of startups come through our various programs and will help you accomplish your innovation goals. Our team also produces and promotes virtual, hybrid, and in-person events on behalf of our partners and clients. For startups, our startup community includes an inclusive, year-long program searching for who will win the national title of Startup of the Year. Our community goal is to help you build the connective tissue for your success. We partner with investors and other organizations and ecosystems around the country to bring you valuable opportunities, networks, and knowledge. We provide startups with mentors, office hours, networking, and various methods of exposure like podcasts, pitch events, blogs, social media, and our daily Dealflow newsletter. We're also proud to support a number of startups from our community via our investment arm called Established Ventures. So whether you're a large organization or just getting off the ground, we want to help you reach that potential by connecting you with the audience, innovations, and resources that you need. Connect with us today to learn more.
Welcome everyone to our second day of events during South by Southwest 2021. We're so excited you're with us today. I'm Jen Consalvo.
And I'm Frank Gruber, and we're the co-CEOs and co-founders of Established, as well as co-founders of Established Ventures. Hopefully you learned a little bit about us during that opening video, a little montage. It was pretty exciting and a lot of fun things going on there. And so hopefully you learned from that. And we see some familiar faces though as well. Some of these folks that are here today were with us yesterday and maybe have been with us in the past as well. So yesterday, if you missed it, we hosted an event that had a number of great agencies to get brought together to share what they're offering for startups. And so it was really focused on startups and government, how they're compatible at last. Mm-hmm. And we had different organizations from like the Department of Defense, we had Department of Energy, we had Small Business Administration or SBA, we had the National Institute of Health, we had NSF, as well as NASA. Right. So we had pretty much every six government agencies that are focused on really offering opportunities for startups, and they got a chance to connect with these different startups, and founders got a chance to learn more about the opportunities, and there's a really great energy there, and yes. Hopefully things happen from that.
And if you missed it, we'll be posting them online so you can check them out. Right. And again, you may think government, I'm a startup. Trust me, there's entirely new processes and opportunities than we've heard about over the years. Applications are shorter, application waiting times are shorter, there's more opportunities. We've seen a lot of startups really benefit from these types of programs.
Right, and it's non-dilutive. You're not taking funding, you're getting a contract to work with the government. So lots of great opportunities there, and we're excited to be able to offer that to our community and bring all these great agencies together. So,
yes. And we also held our very first South by Southwest post-event clubhouse in our new startup community club called Startup Community Club.
Yeah, very creatively, it's the Startup Community Club. Yes. So just search on your little app. You can actually go out and become a follower. We'll add you as a member, and we're going to be doing a number of different events, post South by Southwest week, as well as we've been doing leading up to South by Southwest week as well.
Yeah. We don't think it's going to go away anytime soon.
No, so we're having a lot of fun over there. And it's really interactive. I think that's the interesting thing. It's audio only, so you get a chance to connect with people from all over the world in an audio only way. And
without even doing your hair.
Right, you don't have to get ready for it.
All right.
Just have your phone.
So today promises to be a good time as well. The tables are turned and top VCs are on the stage, and they're going to pitch you and some of our Startup of the Year alumni.
Right, which is super exciting because, our community is what makes us. We've been doing this for a long time, and our community's been growing over the last decade or so. And we're excited because we have 80 companies here that are part of our community and our alumni group. And they're all in the audience here. So hi, y'all. Good to see you. They're going to get a chance to, after the VCs pitch, get a chance to connect with these different VCs and hopefully build relationships that will last and help their companies grow.
Yes. All right. Are y'all ready? Just a reminder, again, after today's reverse pitch, we are hosting a post event on Clubhouse. Bring your tacos, your queso, your margaritas, whatever reminds you of being in Austin, and join us in the Startup Community Club.
That's right, and it's going to be fun, and we're, obviously it's very approachable, but we're going to kind of keep in theme, so keep it a little weird too, because that's the motto. Well. That's the motto of Austin anyway. We're trying to, this is our second South by doing it from home, so we want to try to keep it a little weird. And if you want to get in touch with us in the meantime or right now, you can go to est.us/contact. There's a form there you can fill out. You can get connected to a lot of different areas within our organization, and we will reply and get back to you with the different areas that you reach out to. So est.us/contact. That's probably the best way right now to connect with us and learn more about some of the things we're up to. And again, thank you for being here today. We're super excited to kick this event off, and want to hand it over now to our VP of Engagement, Rich Malloy. Ready, Rich? Let's do this.
Let's go.
All right, all right. Happy South by Southwest, everybody. Welcome to Tables Turned, Top VCs Pitch to You. So the Startup of the Year community has an extensive global network of investors and funders, and we've invited 7 of those trustworthy investors to join us today. And thank you all for being here today, too. Again, my name is Rich Malloy. I'm the VP of Engagement here at Established and a member of the Established Ventures team, as well as a partner at Springtime Ventures. But today, I will be your MC. And if you're watching the live stream on YouTube, please be sure to click subscribe to get access to all the awesome startup content that we produce. Now, before we get to the pitches, it's important to note that everything that Startup of the Year does is 100% free to startups. And we're able to do this through amazing, deeply aligned partners like Finmark. And today's event is sponsored by Finmark. And Finmark is a financial planning software for startups that manages revenue forecasting, cash projections, and runway. I grew up building spreadsheets, and you can, just imagine how popular that made me. But I've basically been doing spreadsheets as long as I've been on a computer. And after seeing Finmark, I cannot imagine why anyone would build another startup forecast in Excel. I've seen more financial models than I can count and built quite a few myself. And they're always complex, convoluted, and sometimes just downright crappy. Finmark took all of that, wrapped it in SaaS, made it beautiful, and kept it dead simple. At Startup of the Year, there are very few products that we stand up and pound the table about, but Finmark is one of them, and you'll hear more from them in a bit. So if you enjoy the free events that we do, you can support Startup of the Year by checking out Finmark and signing up for a free 30-day free trial and see how you can manage your projections and your cash flow and your runway better at est.us/Finmark. Okay, now on to housekeeping. Each investor will have 2 minutes to pitch and 3 minutes for Q&A. Does that sound familiar to you, startups? How many times have you been on the stage pitching? Are you ready to pepper those VCs with some questions? So have your questions ready, drop them in chat, and they'll get relayed to me, and I will ask them to our esteemed investors. Following the pitches, we'll have a private meet and greet for the Startup of the Year community, as Frank and Jen mentioned. If you'd like to be part of the Startup of the Year community, well, you can. 2021 applications to be a part of Startup of the Year are open. soty.link/apply21 will take you over there. And finally, as Frank and Jen mentioned, we're in the club. Check out the clubhouse today at 3:30 Eastern time at est.us/316club. And that is enough of me talking. So let's get to our first investor. Please welcome to the stage, Mary Grove, Managing Partner at Bread and Butter Ventures. Hi, Mary. Thanks for joining us today.
Great. Hi, Rich. Thank you so much for having me. Good afternoon, everybody. So I'm Mary Grove. I'm managing partner at Bread and Butter Ventures. We are based here in Minneapolis. We invest at the early stage nationally, and we leverage what we call the Minnesota home field advantage, meaning that Minnesota is at the epicenter of these multi-trillion-dollar global industries, including food tech, health tech, and enterprise SaaS. And we leverage partnerships with the major corporations in our backyard to support our companies post-investment. So when we invest in startups, we like to say that we look at 6 things: team, product, market, and traction. So I'm going to give you the rundown on those things, but from the bread and butter perspective. So in terms of team, Brett Brohl and I are the general partners, and Stephanie Rich is our head of platform. Brett is a multi-time founder, exited both bootstrapped and venture-backed companies, and he has deep expertise in food and ag tech. He's also the founder and managing director of the Techstars Farm to Fork food tech program. Steph Rich is a startup operator and entrepreneur by background. She was employee number 1 at a high growth startup called Particle. She's also a journalist by background. And I spent the first 15 years of my career at Google, including founding the Google for Startups team, and most recently was a partner at Revolution's Rise the Rest seed fund. In terms of product, what we do, so we invest at the pre-seed and seed stage. Our initial first check averages between 250 and 500K. We like to lead deals. We're also happy to be collaborative capital and help our companies fundraise. We prioritize the 3 verticals that I mentioned, and we're really proud of leaning into our platform, a dedicated platform with things like an experts network, a corporate innovation network, an education series to really help our companies at that earliest stage. Now, lastly, market. Why Minnesota? So we collaborate with the big enterprise companies in our backyard, including the likes of Cargill, Ecolab, General Mills, Mayo Clinic, US Bank, 3M, and many more. From everything from LP capital into our funds to help with diligence to mentorship for companies, sales introductions, long-term, we hope a path to M&A. And in terms of traction, so we're investing now out of our 3rd fund. We have 41 portfolio companies to date. About a quarter of those are in Minnesota, 40% are in the Midwest. And we really strongly believe that investing in more diverse teams leads directly to better financial return. And so currently in the portfolio, 46% of our teams include a female founder, 63% of our teams include a founder who's a person of color. And we're really proud to be based here in the Midwest to harness and bring the best of our region to help support and back great companies nationally. So as a call to action, we'd love to hear from you. We'd love to work with you. breadandbutterventures.com. Everyone on our team does open office hours weekly, and we'd love to work with you. Thanks for having me.
I should unmute myself. You'd think this is my first time doing this. Got the first mute of the day. So awesome, excellent. Thank you for sharing that. Everybody, type your questions into chat, and we'll ask those of Mary. First question is from Ronald Falcone Jr. What revenue expectations do you have, and must a business be CFP to receive a check? I'm not sure what CFP is.
So on the revenue question, I could take that part first. Not necessarily, right? So we invest super early. We index heavily on team. Our requirements are to have a live working MVP that's operational in market. So revenue, is a nice to have, not a must have, depending on the sector that you're in. I would say about 50% of our companies do have revenue at the time of investment to the tune of 10 to 20K MRR, but it is possible to invest pre-revenue. Again, it's all about at that early stage team and then engagement and usage of a live working MVP.
Excellent. Do you lead rounds?
We do lead rounds. Yes, we do lead rounds. We're also happy to help round out existing rounds. We're happy to follow others' leads too, depending on the deal.
Excellent. Question from Anthony at Ease. Hi, Mary. Do you help? How do you help your startups with talent acquisition and help scale?
Yes. So Steph Rich, who I mentioned earlier, is our head of platforms, developing our entire scaled approach to how we support companies post-investment, beyond Brett and my time and Steph's time on a day-to-day basis. And so it's leveraging things like the broader experts network that we've built, our LP network, to help consistently source candidates pretty much on a weekly basis. So it's a big part of what we do. We are exploring a few potential partnerships right now with organizations to help do that at scale more formally. But right now it's very much curating based on the need, going out to the broader network. And, I think it's an interesting time to be hiring and growing, given a lot of our teams are fully remote and plan to be moving forward.
Excellent. Next question from Patientory. Do you invest on safe notes?
We do. We invest across the range of all vehicles. So from safes to convertible debt to priced rounds.
Mm-hmm. Okay. Question from Pedro on YouTube. Any geographical limitations?
No geographical limitations. We primarily focus on US. We actually can invest outside the US as well, but primarily focus on the US. And, about a quarter of our companies are based in Minnesota, about 40% in the Midwest. The rest are pretty well distributed across the US.
All right. Looks like we'll have time for one last question. What is your largest returning startup, and what did you do to help them get there? This is a question from Metaverse.
We have a few, several sort of, I would say, outlier performers at the moment that we're really excited about. We've invested, in those we're at the pre-seed or seed stage, kind of sub $10 million valuations that are now marked up, more than 10 times above that. And I think we are super operational and hands-on from the earliest days. Brett was a multi-time founder. I bring a lot of the scaled operational side from my work at Google. So it's everything from thinking about talent to culture to hiring to ops to PR and lots more that we could cover, but I know we're out of time.
Awesome. Great. Thank you so much, Mary. And I'm sure you'll get plenty of additional questions in the meet and greet with the Startup of the Year community.
Thank you.
Excellent. So next, please welcome to the stage, Clay Gordon, the partner at Stout Street Capital. Welcome, Clay.
Hey, Rich, thank you so much for having me. Again, thank you to everyone at the established team as well for having me. Stout Street Capital, we are a seed stage venture capital firm based in Denver, Colorado. We are actively deploying out of our second fund. We have 2 funds that total about 25 million in assets under management under the core thesis of investing in companies that improve efficiency. The way that we've defined efficiency is a company that can quantifiably show that they either reduce costs or increase revenue to a larger business. We do have a heavy preference towards B2B SaaS business models, even though B2C is something that we would consider. I do want to mention, as listed on the sheet, we would not be able to do a product company, no vice industries, but we are industry agnostic. I would say we are stage focused. So the preferred valuation range is more of an emphasis on this slide as well. But we'll invest 100,000 into a deal that's already led, or we will set terms and lead a deal. But so far, we're in about 60 total portfolio companies. Our market is really the middle of the U.S. and in underserved regions. I think we've invested in about 20 different states. We do a little bit in Canada as well. But when it comes to California, New York, and Massachusetts, I think it would be hard to get it over the line. When we lead, we'll do a larger check size. And I would say the core value prop is access to capital. We started, or one of the co-founders of the Unmet Conference. It's just unmetconference.com, but it's really designed to be a resource for companies raising downstream capital located in places where capital is more scarce. So we've hosted 4 conferences so far. And then last thing I'll mention before the time is up is we're actually hosting Arizona's largest job fair. That's going on live right now at unmetjobs.com. So when it comes to the talent piece, that is something that we're actively engaged in as well. So I'll pause there and excited for questions.
All right, excellent. Thank you, Clay. Good stuff. First question from YouTube. Do you fund alternative energy businesses to build prototype models for a possible patent?
I would say doubtful. We have a lithium battery company, and I think that's where the doubtful came in. If it was a software business focused on clean tech, I would say that would be more up our alley.
Okay. Next question. Will you invest in B2B tech which serves regulated industries such as cannabis?
No. Cannabis, no. Regulated or heavy regulated industries, I would say yes.
Excellent. Excellent. And you mentioned that you do lead rounds. Do you have a preferred instrument that you do when you do lead rounds?
They'll all be priced rounds. Yeah.
Great. Okay. Question from Rootlow. Do you invest in B2B SaaS with product on the market but pre-revenue?
I would say we probably engage in a conversation, help cultivate other relationships to get around the table. Very similar, I would say, other investors, we do want to start the relationship early. We do look for revenue just to get it over the line. We have to sell it to our investment committee, and so these are just things that get it over the line. So yes, we want to have a conversation, but it would just be harder to pull the trigger.
Okay, excellent. Next from Anthony at Ease. What is the length of your typical fund, and where on the life of the fund do you prefer to make your investments? Yeah,
so we have a four-year investment horizon. We usually target, every year is different, but in 2021, we'll target 6 to 8 new investments. Last year, we did closer to 12. So I would say 1 a month or 1 every other month, but we've been leading more rounds this year. And so once every other month, pending more lead deals.
Got it. Okay. Question from Kumbi. In software, do you invest in cloud computing or dev tools?
Yeah. If it gets very technical, I would say we're not the most technical VC, not in a negative way, but a simple solution is something that we look for as opposed to, I don't want to call it like deep tech. Yeah, I'd say unsexy businesses and underserved regions is really our sweet spot.
Great, great. Let's see here. Can you talk a little bit more about your focus on efficiency?
Yeah, I think the most streamlined way to put it is a company that either increase revenue or decrease cost. You see automation really be a large reduction of cost moving forward. It's broad by design. I mean, it allows us to invest across the spectrum. So that's probably the easiest answer in the time frame.
Okay. What's the minimum revenue that you would take into consideration for an investment?
Usually 30,000 a month in revenue, but we've done a fair amount, 10 to 15K a month in revenue.
Okay. All right. And will you invest in a large platform for mental and behavioral health?
Yeah. I think that's a good one.
Okay. Excellent. Whew. All right. Lightning round. These are great questions. Everybody keep the questions coming. Thank you, Clay, for joining us. Next up, please welcome to the stage, Heather Buffo from Republic. Heather.
Hi, everyone.
Why don't you take it away.
Thanks. Hi, I am Heather Buffo, and I'm here to tell you about fundraising with Republic. Republic gives investors the power to invest in the future they believe in. We do this by offering top quality investment opportunities in 6 verticals, and we're able to present these opportunities thanks to founders like you. Why do founders choose Republic for their equity crowdfunding journey? Since 2016, we have facilitated over $250 million in transaction volume. We have a 95% campaign success rate, and we drive up to 70% of investment volume. How can we do this? Thanks to Title III of the Jobs Act, passed in 2016, both accredited and non-accredited investors can invest in private companies with as little as $10. When this passed, Republic created an investment instrument called the CrowdSafe to give your community the ability to invest in you. The economics are simple, it's customizable, and you're in control. We have the technological and legal infrastructure to help founders raise now up to $5 million. As of yesterday, companies now also have the ability to use the Republic platform to garner interest for their campaigns ahead of launch and make demo day solicitations. Our diligence process only takes a couple of weeks. Issuer campaigns get millions of views, and founders get access to our community of alumni and more than 100 venture partners in the investment ecosystem. I'm Heather, and my partner Cheryl Campos and I met at Harvard 10 years ago, and though we took different paths, we both came together at Republic on the mission to democratize access to capital for diverse founders. That mission was initiated and is still led by our fearless leader, Ken Wynn, formerly general counsel at AngelList. Republic now has a roster of more than 120 professionals working together to support founders and investors alike. We couldn't do this without our incredible investment team and our portfolio manager who guide the founder journey. Yesterday, Gumroad made history as the first company to raise the new $5 million cap for equity crowdfunding in just 12 hours, and they did it with Republic. The future of investing will be defined by individual everyday investors, not giant financial institutions. Join us for the retail revolution.
Excellent. All right, Heather, good stuff. And we've got questions already coming in. I do have one question for you though, even before we get to that. On the slide, it said the average check size was $400. Is that the average size of check that an individual invests?
Yes, correct.
Okay. What's the average raise that somebody pulls together on Republic?
In 2019, it was $500,000 and the median was $350,000.
Oh, wow. Fantastic. Okay. Yeah. First question, do you support B2B SaaS platforms focused on cannabis?
Yes, we are able to support cannabis companies, both touching and not touching the plant. It's a one-by-one basis. We have to consult with our banking agents, but they are, working on making themselves flexible to be able to support those companies.
Okay. And then follow-up question to that is, are you seeing demand for these types of campaigns?
Yes, absolutely. Our investors are very interested in the cannabis industry. We've only had, I think, about 10 campaigns so far in the cannabis industry, but we're definitely always looking for more and really strong deals in the space. One thing I will add is just that for cannabis deals, we cannot do, you probably already noticed, we cannot do credit card payments because Stripe won't accept them.
Excellent. Excellent. Question from Metaverse. Can you work with Canadian companies?
Yes and no. So in order for a company to raise on Republic, they must be incorporated in the United States. But if companies meet that and also are in markets outside of the US, we can work with them.
Okay. Would you be interested in talking to a company that is in the ideation stage or just has a small prototype platform for real estate plus blockchain?
That's usually a little bit too early for us. We generally look for companies that are post-product and post-revenue because we found that's what our investors get behind the most. Those are not hard and fast rules. We can always make exceptions, but there haven't been many instances where we've been able to support companies that are still at the idea stage.
Mm-hmm. Got it. Got it. And we did have a couple of follow-up questions from YouTube about the average check size of $400. And so just to reiterate, that was the average amount that an individual puts into a campaign on Republic. But again, the average raise on Republic is what again?
500K. And
Right.
in 2020, it was a little bit less than that. Yes, so the average check size, so because we can, these campaigns can take dollars from both accredited and non-accredited investors, people can invest whatever the minimum amount is set by the company's campaign up to certain limits. So as of yesterday, there are a bunch of changes to these rules from the SEC. But now if you're not an accredited investor, which means you are not worth $1 million or you don't have income of 200 grand or more for more than 2 years, you can write a check up to the greater of your net worth or your income. If you're an accredited investor, there's no longer a cap on how much they can invest through an equity crowdfunding campaign. So, when we talk about retail investors, it's the whole package of, big angels who are writing really large checks and, individuals who are investing $100, $200.
Great. All right. Last question from Anthony at Ease. How do investors from Republic show up on the cap table?
Oh, great question. So we are actually working with our transfer agent to make this simpler, but there are, it's kind of a long answer, so I can follow up you separately.
Okay.
Anthony.
All right. Excellent. Heather, that was fantastic. Thank you so much for taking the time to talk with us today, and we look forward to some more follow-up with you later.
Cheers.
All right, excellent. Next up, please welcome to the stage, Erica Duignan Minnihan from Rain Ventures. Hi, Erica. Thanks for joining us at yet another Startup of the Year event. Always great.
Hey, Rich, it's so good to see you again. So good to see the whole established team and everybody who is joining in. So you guys know that any VC can write you a check, but aren't you worth a little bit more than that? Isn't the vision for your company bigger than just money to be made? We get that at Rain Ventures. That's why we're a seed fund that's built to invest more than just financial capital in building a relationship with our startup founders that goes way beyond money. Sure, you'll get up to $1 million in initial investment and up to $3 million more in follow-on capital, but you'll also get access to our human capital, a carefully curated network of diverse and experienced candidates to help you build your team. Social capital, access to our extensive personal network of influential people in finance, technology, and entertainment. Intellectual capital that's been built with 25 years of hands-on startup investing experience. And most importantly, emotional capital. When you join the Rain family, we are not just invested in your business, we're invested in you. So if you're a founder raising a seed round for a tech or tech-enabled startup, we'd love to meet you. Who are we? Well, my partner, Monique Idlet-Mosley, and I have been investing together for nearly a decade and working together to help our startups grow. In fact, one of our favorite portfolio companies, Solo Funds, won the Startup of the Year competition last year. Guess who wrote the very first check into that company? It was Rain Ventures. Our sweet spot is leading at seed and working hand in hand with our portfolio companies to get them to a successful Series A in 18 months or less. If you believe in the value of diversity in your team and on your cap table, we'd love to work with you to make your company a huge success. Thanks.
Nailed it. Right on the mark. All right, Erica. That was great. I had no idea you were the first check into Solo Funds. That's awesome.
Yeah.
Very cool. Very cool.
It was awesome. We're so
Yeah.
proud of them.
Yeah, definitely. Yeah. All right. Questions are already coming in. First question, capital efficient. Does that equal cash flow positive? If so, if not, what are you looking for in monthly revenue?
Yeah, so capital efficient does not mean cash flow positive. It just means that your company doesn't need, $250 million to reach break even, which a lot of companies do. So we're looking for companies that can get to where they need to be on 50 million or less in total invested capital. And then what was the second part of his question?
And so then what are you looking for from monthly revenue?
Oh, so, monthly revenue, it really depends on the type of company. Ideally, you should probably be at, just a ballpark figure would be somewhere around, 25 to 50K in MRR is a good point at which you can think about raising a seed round. But it really sort of depends on the type of company that you've built, what sort of IP assets you have within the company, how many users you have, and what sort of the long-term goal for monetization of the company is.
Great. Excellent. Next question from Anthony at ease. I can just picture Anthony sitting in the front row with his hand up.
Hey, that's like me. I'm one of those people.
Yeah. Because he's been getting the first questions in from the start of the year community here. How do you differentiate between businesses that show potential to be a successfully venture-backed business versus just a success? Or I shouldn't say just. He didn't say just. How do you differentiate between a successfully venture-backed business versus a successful business? What outliers are you looking for?
Yeah, that's a great question. So total addressable market and scalability are the two biggest components to that. So number one, your total addressable market needs to be at least $1 billion or more. So you can have a great company, that has an addressable market of 50 million and, you'll probably be very wealthy. You can become a millionaire off of that, but it's not really venture investable. So addressable market of $1 billion or more, and then scalability. So what we mean by scalability is that there has to be a relatively easy way for you to use technology to reach a large number of customers with a fairly low marginal cost. So it's easy for you to get in front of your customer, probably through digital channels, and you can actually acquire that customer for a cost of less than a third of the total value that the customer is going to bring to your company's bottom line.
Got it. Great. Next question from the last game.
A million times.
Yeah. Next question from the last game board. How do you feel about hardware investments and knowing the last game board hardware plus a platform?
Yeah, so I have done some hardware investments. One of my favorite startup investments is in a company called MadeBot, which does a robotics technology that's sort of like an enterprise grade Roomba for hospitality and commercial spaces.
Cool.
So we're certainly happy to look at them, but the team, has to have in-house experience and understanding of the manufacturing process because it can be complicated.
All right. Last question. Quick yes, no from Rebrick. Would you consider companies that work adjacent to sin industries, for example, supporting back office for sin or vice industries?
Probably not. Sorry, guys. We've got banks in our LP base, so we don't really want to mess with any of their restrictions.
Awesome. Cool. All right, Erica, thank you so much. And we'll look forward to the follow-up later on. So thank you for joining us. And next up, please welcome to the stage, Rami Assad from Finmark. And Rami is going to tell you all about what is rocking over at Finmark and why I'm giving that such a ringing endorsement. So Rami, please take it away.
Hey, thanks so much, Rich. This is fun, but I guess it's now my turn to get grilled with questions. So let me tell you a little bit about Finmark. And Finmark is financial planning software for startups. We make it simple for companies to manage your runway, cash, forecasting. Just like Carta moved your cap table out of spreadsheets, we want to do the same for your financial model. I built Finmark because a bad financial model almost killed my last company. After laying off employees and cutting costs, I was able to recover and eventually sold that business for over $100 million. But too many other great startups don't recover and fail because of poor financial planning. And we want to make sure that that doesn't ever happen again. We start by building a custom financial model TurboTax easy. You can literally start from scratch and have a detailed model in 30 to 60 minutes. And this isn't a template, mind you, right? Why try to shoehorn into a template that you don't even understand? With Finmark, you build a custom model loaded with expense and revenue drivers just incredibly quickly. And once you build out your model, you can rest easy knowing that we're going to automagically maybe keep your model up to date through our integrations. You'll know exactly where everything stands without having to do any manual data entry in Excel. What good is a model if it's not up to date? So we know that, and we make sure that your model always stays up to date, up to the day by day. Then in our dashboard, we're going to calculate and display the most important data points that you should track and that investors care about. Things like runway, burn, details in your spending, even metrics like CAC payback, LTV, margin, were all calculated automatically for you. But most importantly, we also explain them so that you can get a better handle of what those metrics are. And it's not just about you. With Finmark, we make it painless to collaborate with your co-founders, executive team, and your investors around your financial model. We're going to empower you to share the right parts of your model on a need-to-know basis. At the end of the day, a clean and easy to understand financial model for many companies means the difference between getting funded and being passed on by investors. So hopefully you take the plunge and join the hundreds of other startups that are loving Finmark and get funded faster.
Awesome. Very good. Thanks, Rami. Let's open it up to questions. I'm going to lead off here because as an Excel geek, right? I mean, what's the most common pushback that you get from, say, the CFO or the part-time CFO from the, when a founder comes to you and wants to start using Finmark?
Yeah, I think the most important pushback that we get right now is, hey, I have this special nuance, this very special thing that I model out with a custom formula, and I can't do it. There's too many guardrails here in Finmark. That's honestly the biggest pushback, and we're actually adapting to that. We're opening up custom formulas over the next couple of months. So we're hopefully taking that away. We built initially Finmark with guardrails in mind so that we make sure that every model that comes out is clean and easy to understand. We wanted to make it guided for first-time founders, but now we're going to allow power users to kind of go above and beyond.
And how does Finmark fit in with reporting to your current investors and potential investors?
Yeah, so you can control what you share and with who. So with Finmark, you can share just the high-level metrics with potential investors or your current investors. You can share detailed views of the model. You can share read access, read-write access. You get granular access of sharing what you want to share. And you also can create as many different models or scenarios as you want. So potential investors, you probably want to create a custom model that shows what happens if you take their investment and how that upside looks. Whereas your existing investors probably care more about the operating plan, that day-to-day model that you're running the business off of now, that's probably a little bit more conservative. Both of those can be shared with either stakeholder.
Awesome. Excellent. Is it better for, say, SaaS businesses versus product companies?
Yeah, I'll say that right now we're built for software and SaaS companies. If you are selling anything that's recurring, we're a great fit. If you have inventory, if you're an e-commerce company, if you're an advertising company, we haven't built out the right modules for you yet. E-commerce comes later this year, and then we'll take on additional types of businesses next year.
Great. Question from WiseHer. Do you have an affiliate program?
We do have an affiliate program. We do try to spread the word as much as possible. So if you email Julian at Finmark, we can talk a lot about our affiliate options.
Awesome. Excellent. We'll get you connected over there. Okay. Rami, that was fantastic. Look forward to the follow-up with you later on today. So thank you so much for joining us. Thanks for being a sponsor and a supporter of this program, as well as of Startup of the Year. And I look forward to sending many companies over to you and seeing Finmark models come back at me as we go out to invest.
Awesome. Thanks so much for having me, Rich.
Oh, excellent. All right. Excellent. Next up, please welcome to the stage, Carlos Antequera from Novel Growth Partners.
Hello. Thanks, Rich.
Thanks for joining us today, Carlos. I'll let you take it away.
Definitely. Thank you. As Rich mentioned, my name is Carlos Antequera from Novel Growth Partners. We are a Kansas City revenue-based financing venture firm. So being an entrepreneur, I'm sure many of you have experienced the journey of traditional entrepreneurs trying to get growth capital, and you have the choice from banks on one hand that ask you for personal guarantees or collateral to give you money, or in some cases having to satisfy the super high growth requirements that traditional VCs require. That's why we took a different path. And 3 years ago, we started Novel, taking an approach for fast and flexible investments that work for the majority of software companies. So our approach, unlike your traditional equity VC that get a percentage of ownership of your company in exchange for their investment, with the hopes of trying to get an exit in the next 5-6 years to return their investment. Our approach is simple. We make an investment and we get our return via a small monthly royalty that is a percentage of the ongoing revenues until an agreed return. So natural question, who do we invest in? We invest up to $2 million in B2B software companies. We have a minimum of $500,000 in trailing 12 months as far as revenue requirement, and about a 30% year-over-year growth is kind of the sweet spot. As far as kind of best use case scenario, when you're trying to get a bridge round, maybe concerned about dilution, or thinking about investing in sales resources to accelerate that push into your market when you already have a product, you know who your customer is. And in a simple way to entrepreneurs, if you know that you can invest $1 and get $4 or $5 back, then you know, we're a perfect use case.
Excellent. Wonderful. Thank you, Carlos, for joining us. And thanks for the great overview. For people that are not familiar with revenue-based investing, this is a whole new, not new, but relatively new field. There's a lot of growth happening in this space. I love this. And I think that this is a fantastic vehicle. And I wish that more startups knew about this. And so that's why I'm stoked to have Novel here today. You know, Carlos, to have you here on the stage to talk about revenue-based investing so that more people are aware of it and know that there are more options out there. So I love that, you know, it's just a great mix to have a lot of different funding options here. Okay, first question for you. How does this fit with traditional VC, and does it fit with traditional VC?
Yes, you know, we have the flexibility and the opportunity to invest with companies that are bootstrapped, companies that have taken angel investment, companies that have taken VC investment, that are about to take another round, you know, thinking about another round in the next 12 to 18 months, and maybe they're trying to get to those key milestones to show the right momentum to the next round. So we're super flexible. We can invest, again, we don't need a lead. You know, we can invest solo, we can invest with other people. So super flexible from that perspective.
Got it. Great. Next question from YouTube from Colby. Would Novel be interested in investing in our first prototype appliance, an HVAC that offers a new form of energy distribution that can reduce power bills by 100% and be commercialized?
Yeah, at this point, we're focused on B2B software. And it doesn't have to be fully recurring. You can have services with it. So we take into account kind of your full revenue base. If you have some hardware component as part of your software platform, then we'll consider that as well. If you're pure hardware, right now that falls a little bit out of scope.
Got it. Okay. And then on the slide, it said minimum of 500,000 in TTM. And so just to define TTM, trailing 12 months of revenue.
Correct. Yeah. So we don't look at necessarily again kind of your MRR or your ARR. We look at your full revenue of the last 12 months.
Gotcha. And so on average, that would be just over 41,000 monthly revenue on average, but for the last 12 months. Got it. What's a typical length of time for that payback period?
So we look normally at 3 years to 3 years, the sweet spot really for the payback period. But we have the flexibility to give a prepayment discount to companies. So if somebody's thinking about raising a large round in the next 12 to 18 months, then or you have an exit within that period, right? You get a discount for getting our investment back at a sooner date.
Got it. And so just to clarify again, is there an equity component to the way that you do revenue-based investing?
We have both options in which we can do basically a totally non-dilutive deal, or in some cases we'll take a minimal amount of warrants to align us and the companies for the long term, and it gives us a little bit of flexibility as well within the royalty. If somebody's trying to optimize, let's say they don't have high gross margins and they're trying to reduce that royalty, so we can work with that.
Great. Last question. How do you add value? How does you and your team add value to the startups you invest in?
Yeah, good question. We're definitely focused around best practices around sales and marketing. So you might realize it's super well aligned with what we do. The more revenue the company generates the better valuation for the entrepreneur and the better chance we made of good investment.
Great. Awesome. Thank you, Carlos. Thank you for joining us today.
Thank you,
Look
Rich.
forward to the follow-up in the meet and greet later.
Definitely.
All right. Excellent, everybody. So next up, we have Allie Burns, CEO at Village Capital. Please welcome to the stage, Allie.
Hello. Hey, Rich, and hey, everybody. It's great to be here. As Rich said, I'm Allie Burns, and I lead Village Capital. We are an organization that supports and invests in seed stage impact-driven startups, and we're particularly excited about moving more capital to more people, places, and problems. Over the last decade, we've provided catalytic investment for more than 100 companies around the globe who are solving problems in sectors that help people live healthier and more productive lives. Sectors like financial health and inclusion, future of work and learning, health and health tech, and food and agriculture. Geographically, we're focused on companies inside the US who are within the coasts or in rise of the rest geographies, but we're also active in Latin America, Sub-Saharan Africa, and South Asia as well. We have a very unique peer review-based decision process, which has led to an incredibly diverse portfolio that we're really proud of. Nearly half of our startups are led by women. More than a quarter of our US portfolio are led by BIPOC founders, and 80+% are outside of the 3 hotbeds that get most venture capital. And as much as we love New York, San Francisco, and Boston, we think that they did not corner the market on innovation, and there's a lot of opportunity elsewhere, as you've heard from many of the other leaders pitching today. So at Village Capital, we do make investments exclusively in companies who have been part of our investment readiness support programs. If you are interested in understanding what types of programs we're recruiting for currently, I'd encourage you to go to our website at vilcap.com. The last thing I will say is, according to the Case Foundation, we've built the most connected impact investment network in the world, and that's a network that we leverage effectively for the founders we support to bring together a powerful coalition of investors, mentors, potential customers, and other stakeholders to really add value beyond the check. I will stop there with 10 seconds to go.
All right, excellent. Very good. So everybody get your questions for Allie going. Allie, first question for you is, can you give some examples of portfolio companies that you have supported in the past and how you've helped them grow?
Sure. A company that we have just recently exited is a company called Pear Deck, and just a little bit my background. I previously worked for Steve Case, helped launch the initial Rise of the Rest initiative prior to the launch of the fund that Mary was part of, and Mary joined us in Detroit on our very first tour. Pear Deck is a company that we have co-invested in with the Rise of the Rest fund, and they most recently merged with a company called Go Guardian. But Pear Deck was one of our earliest accelerator participants in an EdTech accelerator that we ran in, I believe, 2014. And we've been working with them for the last 5 years to help accelerate their growth. They were really well positioned to merge with another company in the middle of the COVID pandemic. They're a company in the EdTech space. I'm really proud of how they grew.
Excellent, excellent. Next question from YouTube from Bill. Would you be interested in circular economy / sustainability startups?
We absolutely are. We're running a program right now with Kroger, which may be of interest, focused on zero waste, zero hunger, which certainly is in the circular economy space, as well as outside of the US. We're very interested in this space as well.
Great, great. Next question from Shauna from YouTube. Any advice for getting pre-revenue funding?
Sure. Find the folks like Village Capital and others who remain very interested in seed stage. We don't exclusively do pre-revenue, but we are certainly open to pre-revenue companies. I would also recommend using a tool that we've launched called Abaca. It's abaca.app, and that will help you not only evaluate where you are in your startup journey, but hopefully help identify some pre-revenue investors that are in our network.
Got it. Okay. And then from Anthony at Ease, do you do follow-on investments during later stages?
We follow on exclusively in companies that have already received investment via our programming. So we will follow on, but as you can see, as you may have seen from the slide, our follow-on capital is up to about $1 million. So we typically wouldn't participate in much later rounds than sort of A or B.
Got it. Okay. Question from Wise Her. There aren't a lot of programs here in the US. Would you have any others in the future?
Yes, we have, so in the US right now, we're focused on health, and I mentioned the sustainability program. We will have a couple of programs launching later this year focused on future of work, justice tech, and fintech and financial health specifically.
Okay. Question from YouTube, Hani. Great overview, Allie. Please summarize your focus areas from impact investing.
Sure. So as I mentioned, we sort of have this broad bucket of sort of two buckets: economic opportunity and environmental sustainability. That's where fintech, future of work, food and agriculture, and health as sort of the three big themes.
All right. Excellent. Wonderful. Thank you so much, Allie. Look forward to following up with you later during the meet and greet here. So, and last but not least, batting cleanup is, please welcome to the stage Dan Kerr from Flyover Capital. Welcome, Dan.
Hey, Rich. Great to see you, and thanks for having me. As Rich said, my name is Dan Kerr. I lead deal flow for Flyover Capital. We are a Kansas City-based fund. We were formed by entrepreneurs to invest in the next generation of tech successes outside the coastal tech hubs. And we're particularly focused on the companies that advance the region's incumbent industries. So we've been investing about 6 years. Really found this to be an incredible growth market. And even in the last year where people have moved around in unusual ways, we found people revisiting their roots here in flyover country, and we're excited about the road ahead. And we really like this model of where your customers, your clients, your acquirers in the B2B space can be right down the street. So we're a generalist. We focus on primarily on B2B software. And within that, particularly kind of like I say, these incumbent industries, traditional players that are being changed through technology, financial and insurance tech, financial infrastructure, supply chain tech, manufacturing, or anything that is enabling the blue collar workforce. We do lead rounds or serve as meaningful minority capital, usually with a $500,000 to $2 million check. And our swim lane is a $1 to $5 million round, which tends to run the spectrum of seed, post-seed, sometimes a smaller A round. And we do reserve about 100% for follow-on, so we'll double down on that initial investment. So I would say, if you're looking for a fund that has a great mix of pragmatism and even puts that ahead of sophistication, and has a fantastic network in the middle of the country and has proven success, I would love to connect with you. So thanks very much, and look forward to your questions.
Awesome. Thanks, Dan. Love that you ended with, pragmatic. What a great Midwestern way to put it. So that's awesome. We've got great questions coming in already. So if you have questions, drop them into chat. First one from YouTube from Ramel. Is there someone who would like to help fund a media company out of Los Angeles?
Yeah, so for us, media is one of those spaces that we have a couple businesses that touch media, but it is not a focus. And our technical limitations is we don't invest in the Bay Area or New York, Boston. So LA is a possibility, but a media-centric company in LA is really just not our bread and butter. So unlikely.
Got it. And you answered the next question, which was geographic boundaries. Would you invest in California or Washington State, for example, or Seattle?
Yeah. So from time to time, we do consider companies, in the Northwest or outside of our area. And so it's open to consideration. Where we really focus our energy is really Denver to Atlanta, Twin Cities down to Houston, where with a small team we can be boots on the ground and really know the ecosystems a little bit better.
Got it. Okay. Next question from YouTube. Would you be interested in a B2B supply chain SaaS platform supporting regulated industries, including licensed cannabis?
Sure. We're definitely interested in B2B supply chain. I would need to understand more what the play is with cannabis. It's not an absolute exclusion for us, though to date we really haven't found the fit with a big market focused on cannabis and the kinds of technologies that we're investing in. My hunch is that if it is truly cannabis specific, then it would be a little bit more of a niche than what we're focused on. But from a B2B supply chain tech standpoint, that is well within our focus.
Got it. Got it. All right. And then what about support and connections that Flyover provides to portfolio companies?
Yeah, so we have, we really start with our founding partners, both entrepreneurs, longtime investors themselves, that are, very actively involved with virtually all of our portfolio companies. Through that and the rest of our network, we have some affiliate groups that we use to have, a large group of really operating advisors. So deep network in a lot of the sectors that we're touching. As far as kind of the formality of that, we do have a playbook, that sort of thing that we help our partner, our founders with. However, mostly we kind of view it as a hands-on effort with our portfolio company team. So it's mostly that being there for the company, day in, weekend out, and when disaster strikes.
Got it. Got it. Excellent. Is Flyover doing safes or convertible notes or priced rounds only?
Yeah, so we lean towards a priced round. We think that best aligns incentives, but we have done both safe and convertible notes, kind of assuming that the rest of the both the business's focus and the nature of the round and things meet our criteria.
Excellent. All right. Whew, man, that went fast. All right. Thank you, Dan, for joining us. Look forward to the follow-up later.
Thanks, Rich.
Yeah. And so, okay, that was some great pitches, and holy cow. And I think next time we do this, I think we should do this again. What do you think? Did you like it? Thumbs up, subscribe. Let us know how the stream went for you. I'm sorry that we couldn't get to everybody's questions, but I think that what we learned is that you've got a lot of great questions and that you want to meet these investors. So I hope you found some amazing new capital resources. Thank you so much again for taking time out of your busy schedule to spend with us today. Subscribe to that YouTube channel, head over to est.us/Finmark, get a free 30-day trial, and start running your financial model and bringing it out of the Excel Stone Age. And if you'd like to be a part of the Startup of the Year community, well, come on in. So soty.link/apply21. And be sure to join us at Clubhouse at 3:30 Eastern today, est.us/316club. Startup of the Year companies, stick around for the meet and greet. Everyone else, thank you so much.